Making today's video a couple minutes early before the market closed. I don't expect a whole lot to go on between now and then, but it's been a relatively quiet day, except for the fact that we're getting some progress on infrastructure. White House making a counteroffer that seems relatively reasonable at $1.7 trillion. It's still above the Republicans' deal. It's unclear to me whether it's going to include tax increases, which the Republicans are against. But it's good to see that this talk is still circulating. You know, this is additional stimulus that will likely have some impact on the market. Now, I'm not saying it's the biggest thing for the market right now. That's going to be interest rates. But it seems like that those interest rates are going to tick up, at least they should, at some point in the moderately near future. So, you know, on this Friday, relatively quiet day, we're kind of seeing what happens. Markets are relatively flat. Not a whole lot going on. It looks like the market could be positioned for some sort of rally, given all of the cash on the sidelines. There hasn't been this much cash on the sidelines since May of last year. And that's typically a good sign. If we get additional stimulus, additional infrastructure spending, a continued dovish Fed, having cash on the sidelines is not the best investment. It just isn't. It'll be better to put your stuff in the market where the stimulus is going. The stimulus is going to a lot of stocks, particularly things like energy. You know, if there's a lot of machines working and new uses for infrastructure, you're going to get more energy consumption. And supply is low, and it's going to remain low because these companies want to remain profitable. And India is still not completely online, neither is the EU, and neither are we. So there's a lot of room to run. Energy is still a good area to invest, and we'll see what happens. So until next time, have a good weekend. Peace out.